Thanks so much for tuning into this earnings conversation. Some companies tend to defy valuation gravity. People think that there is not much more that can happen irrespective of the quarterly deliveries, and then they come and surprise. And Mindtree is one such name. The stock has been a top performer for the last 12 to 18 odd months. But the beauty is that, well, the street expected the company to post a USD and a constant currency revenue growth of about 8.2 to 8.5%. They came out with a number of over 13%. And this is despite their top client clocking in almost a flattish performance sequentially. What went behind this quarter and what could the outlook ahead for the second half possibly be? Venu Lambu Johnson to talk about all that. Great having you, Venu. Thanks so much for joining in and congratulations. It was a really, really strong quarter. Tell us what went behind this.
Firstly, thank you, Neeraj. Glad to be here. Talking of another successful quarter. Look, what went behind that? A lot of hard work, right? So I think we've been consistent when we actually came out with 4x4x4 strategy. That being focused in the business is extremely important, so that you have the growth, and which is a sort of industry leading growth, and plus it is consistent, right? And that's exactly what is getting played out quarter on quarter basis. In the sense, if you look at our growth, it came in the sectors that we said we will see a significant digital adoption, whether it's the retail and CPG sector, BFSI sector. We had spoken about green shoots in travel and hospitality last quarter when I spoke to you. So again, the green shoots are just getting greener. So, again, the fourth consecutive 10% quarter on that as well. And then when I look at our service line, the customer sectors, that's where most of our customers are spending time in transforming their customer experience. That shot 22% growth, as well as our service line capability, and so was our cloud. So I think it is our strategic decision to be focused on 4x4x4, and that's exactly what's getting played out in the market. And we are investing in all the new geographies as well. That's also a big result. I think Q1, when I spoke to you, I did mention about our doubling down Europe focus. We've been talking about this for the last 2-3 quarters. So that doubling down in Europe has started yielding results. We have a long way to go, but it's a good progress, I would say.
Okay. Let me try and pick up some pieces out of that answer and other points. So the belief since the start of the year, at least, Venu, was that led by tailwind in TTH, as well as your top client, you would continue to do well, though nobody anticipated 13%. But the beauty, as I said, was that and please correct me if I'm wrong, but when I look at it sequentially, it's not that your top client really materially contributed. It was almost a flattish contribution, which shows that the breadth of your top 20 is expanding, and that is leading to growth. So is this also a conscious decision? And is this the sign of things to come, that you can show growth even without the top client's contribution moving up? And will TTH continue to do what it has done for the last 3 quarters?
Sure. Firstly, I think, we want the top client to grow, and, we still have a lot of opportunities where we can create value for our top client. So we'll continue to grow top client. I think, this quarter, a flattish kind of a number is more of a seasonal thing when it comes to the top client. Otherwise, I'm fairly confident of continue to grow in our top client. That's number one. Number two is when I look at, the growing the second and 20 accounts and then our top 40 accounts and so on. That is because we invested in a go-to-market structure which champions upselling and cross-selling. Right? We invested on service line specialists in the markets organization who work with our industry sector leaders to actually cross and upsell them, right? So that you can't do digital transformation by selling discrete services. You have to connect the dots to make it truly digital for our customers, and that can come in only when you start getting the capabilities of all cross service line. And when you start doing that, your wallet share in an account increases, and that's exactly what's happening in our case. That the more we connect the dots, our ability to increase our wallet share in our existing account increases, and that's the reason why it is contributing. And then lastly, with regard to the TTH, look, I think TTH, the good news is that the global economies are opening now. The business travel is coming back, may not be at the same volume and pace at which it was before, But people are traveling. I did my, few business trips over the last few weeks. So, a lot of my colleagues are traveling. Yeah, it's good signs to come on the travel and hospitality. And, I do hope it remains that way.
Yeah, normalcy is always welcome.
Yeah.
Are there any major changes or challenges on the averages for either deal momentum, tenure, or pricing? The deal intake did seem a bit soft, but I've seen that happening almost across almost all the companies that have reported earnings thus far.
Yeah. Look, when it's about Mindtree's order booking, there are two aspects that I wanted to clarify. Right. So first is, if you look at our first quarter, it had one or two significant renewals that got renewed in the first quarter for us, and that always happens. If you see historically, our first quarter order booking is slightly bigger than the Q2 as such, right? So that's one aspect of it. The second is, I do believe that in the digital engineering space, you may not have one single contract, which may be multi-year and multi-fold, but you have a contract and an agreement, which gives more than one dimension in terms of how you can maximize revenue, because digital transformation is a continuous evolution spend, right? If you're doing a simple IT enablement spend, you budget it and you start tracking against the budget. But when you're trying to do something to transform the business model and maximize the revenue, it's not necessarily based on a fixed budget from a customer spend point of view. It is based on how the revenue starts evolving for them, right? So if you're playing in the area of digital being core to the business, then I do feel that the multi-year construct will manifest in more than one way. In the sense, if you are a digital engineering partner for a customer, you may not get one single contract value, but you might get a volume which may be equal to higher than a classical IT outsourcing contract value, right? So I think that this is a sort of a change in dynamics that I see in the market. That there are annuity deals out there which are for the classical run kind of a deals. And then there are deals which are for digital engineering, discretionary spend kind of contracts, which also have a significant volume, which we can't ignore now.
And what percentage of new deal wins are deal wins of such a nature wherein the TCV, if you will, is not necessarily fixed and it's multi-year?
Well, look, I think I would say that anything about 12 plus months kind of contracts are still about 60-65%. I would say still has a majority of that. But I do believe that over the next few years, the volume of business or the volume of spend that might happen in the digital engineering space, where the discretionary spend towards revenue maximization will be done, will outweigh the spend on the IT enablement spend, right? So at that time, the contracts will come out differently. The structure of the contract will come out differently. But I think we are not there yet, but it will happen in the due course.
So just so that I understand this correct, Venu, you are saying that there could be a lot of orders which optically will seem like less than 12 months and smaller in size, but this could be recurring in nature, and therefore optically it may seem like a short tenure contract, but in reality it could actually be a multi-year contract just divided into periods which are less than 12 months.
Yes, you're right. Yeah, that's how some of the discretionary projects, some of the digital engineering projects are led. Because when you're working on a digital product development, it's not one-off product development. It's not that you manufacture one, physical product and just leave it to go. So when you do a digital product development, you start working on enhancement, do the releases, you increase functionalities. So it's a continuous evolution, right? I mean, the businesses have to be competitive in the way they sell their digital products. So, and they need people like Mindtree to actually continue to work on their digital products. To keep their products more competitive, or to keep their customer experience more competitive, and so on, so things. So hence, I'm very passionate about anything to do with the spend towards the enhancing our customers' revenue, right? Because I think that's where the future is.
Okay, so no worries on the deal intake front, and probably time for the analyst community to also start reading these numbers slightly differently.
I do feel so.
Okay. What about the big concern for almost everybody, and I'll roll both the things into one, the manpower issues of the attrition, which is inched up quite significantly for you, and consequently the margin impact, because you've managed it very well this quarter. Would you be able to do that consistently? Simply because I hear attrition numbers pick up across the street, and almost everybody is saying that either the manpower costs are going up, or because there is not enough manpower, the outsourced work costs are also moving up quite substantially for them. So what's been your experience?
Look, I think all the trends with regard to attrition, challenges on new hire cost, challenges on subcon, I think it's a common issues across the industry, right? So I think it all depends on to what degree you can control it, and to for that particular quarter, and to what degree the strategies that you adopt helps you to take it over the long term. Look, so from our point of view, our commitment of keeping our profitability at 20% EBITDA, which we have been saying it over the last few quarters, that commitment still holds good. We're still confident of doing that, and there is no one solution for it. It's a hard work, managing all the variables that I spoke of. But I do believe that we have the right strategies, processes in place. The way we manage it, the quality of delivery, all those things comes into the place to make sure that you run a very efficient and a profitable business.
Okay, but do you sense attrition numbers coming down, or is it difficult to call that right now?
Difficult to call out. I wish I would want it to come down like anyone else, right? But I think it's difficult to call out. It's difficult to call out, right? But I think it'll be interesting to see when the workforce starts coming back to offices, and when the employee engagement enhances, in-person engagement enhances. Probably it will have an impact in terms of connecting to the organization and the teaming, bonding, and so on, so things. So I would like to assume that those things will have an impact in bringing the attrition down, and so that's optimistic about it.
And are you guys taking a call of asking a majority or a large portion of your workforce to start coming back to office? There was not a need felt earlier. It was believed that the cost effectiveness is great of work from home. But are you kind of looking to reverse those decisions?
Look, I think our position always has been a hybrid model, right? I don't think we took an extreme point of view to say, look, it's 100% remote or 100% on-plan. So it's going to be a hybrid model. So we will do it in phases, right? So starting from probably the next quarter end and leading to the first, to the Q4, we'll start doing it in phases, so that there will be some population of Mindtree minds who will be in office, and some of them will continue to work remotely. So I think that's the future. That's how it's going to be, right? Whether I don't know whether we'll go to the 100% of the capacity what we used to have it before. The right thing to assume is that it will be a hybrid model, right? So some set of employees in on-premise, and some of them may be remote. So that's the direction we're going.
Yeah, but which was anyways the direction. I'm just wondering if the proportion of employees working from office would now be higher, simply because all the things that you spoke about, the engagement, etc., all would require more employees to be in office. So could it be a conscious call that even though it saves costs, but let's have employees in office because it helps attrition? So more proportion as compared to what you would have thought earlier?
Look, I don't think we have any fixed target, to be honest.
Okay.
Right?
Okay.
I don't think we have a fixed target of how many people need to be in office. It's more about as long as it is safer and people feel comfortable to work over there. Those are the things that plays a role in terms of how many people need to be in each offices, and in each location it may differ as well.
Got it. Okay. Last couple of questions, slightly midterm questions, if you will. One is, I think you yourself had said that you want to expand the addressable opportunities, focus on to new verticals like health. And while you spoke about Europe in your earlier answer, I believe the non-US geos is what you have laid a lot of emphasis on. So not just Europe, but maybe APAC, Japan, MEA, etc. Tell us a bit about how did that shape up this quarter?
Sure. Look, I think, firstly, as you would have observed, the North America clocked $1 billion run rate for us this quarter, right? And the Europe and UK is $250 million run rate, and APAC is $100 million run rate. So, all the geos have now got a fantastic foundation on which we can grow, right? So what we've also done is we have, gotten the new leadership at a geo level. We announced the new leaders in the European market as well as in the Asia Pacific market. So we're going to make good investments over there, both in terms of the nearshore capabilities as well as supporting our global customers in those geographies, apart from supporting the local customers as well. So it's early days, Neeraj, in terms of especially when I talk about APAC and Japan, it's very early days. I would wait for a couple of more quarters to come back and give you a much more definitive narrative in terms of how the implementation has happened on the ground. But with regard to the Europe, I think we are 2 quarters ahead compared to APAC. So we are already showing the results.
Okay, maybe towards the end of the financial year, maybe I'll repeat this question and get some more clarity. One final question: this distributed delivery model, creating virtual offices, etc. How successful is it proving for you in light of the fact that there is now a workforce which is looking to return to office, and on all the other manpower issues that we spoke about?
Look, I think the resilience of our delivery model was proven over the last 18 months of people working remotely and doing projects which actually was assumed that it needs a physical presence for people to collaborate. But the virtual platforms have sort of solved those problems. So that way, we are extremely happy about how it has come in. None of our delivery nor projects are impacted, based on the model that we have been using it over the last 18 months or so. But I think when we talk about returning back to the office, it only strengthens that model. That's how I look at it. So it's not going to be a switchover, because I think that foundation has been laid out, beautifully. So now, what else you can add value of services based on the foundation? Because people have learned how to collaborate virtually. People have learned how to solve problems, working collaboratively remotely. I think that's a great learning, and there's a huge amount of knowledge that exists. We shouldn't lose that.
Okay, my final question, Venu. This quarter's delivery was very robust. I heard you mention that the top clients' flattish sequential contribution is seasonal in nature, but the other clients have done really well for you to clock in this 13% number. So if the top client also starts contributing in Q3 onwards, is the market justified in expecting more than what you've done this far?
Look, I don't know what is more. Everybody's definition of more means, different.
More than 13 would be too much to ask for, but I'm still wondering.
Yeah. That's what I'm saying, right? So I think, the way I would like to put it is that you asked the same question when we were in Q1, saying that, when we delivered 7% growth, are you confident of a sustainability, and are you confident of sustained growth? So I just would like to reiterate that point, that we're extremely confident of a very sustained growth, this year. And I've been saying this right from the beginning. Look, we've never seen this kind of digital, demand. So it's a question of whether we make this year a good year or a great year. So that's the next second half will decide.
The ask on a very good number that the street has from you, Venu, is very, very small on the second half after a splendid first half. So I'm just wondering if you beat that 30% number comfortably for the year.
Yeah, we'll see. We don't usually give a number out, Neeraj, that. But I think your scene has been consistent that, look, I'm bullish about the demand that's out there. So as long as we remain focused on our strategy, get our customers, we stand in front of our customers and solve their problems, I find no reason why we can't continue to keep the growth.
Keep up the splendid work. A fabulous quarter, and all the best for the quarters ahead.
Thank you.
And of course, best wishes for a very great festive season.
Thank you, and wish you the same.
Thank you. And viewers, thanks for tuning in.